Hello guys and girls, welcome back to my YouTube channel. Today I'm going to show you how I do my trading analysis accurately by just using a smartphone. We will go step by step together and the results of this analysis will be shown. Please do get your pen and notebook ready for notes taking. Now, most of losing traders always start doing their analysis on the lower time frames. As a result, they get too much zoomed in, and in turn they forget to see what the market bigger picture is showing them. So rule number one, always start doing your analysis on higher time frames. I personally tend to use 4-hour time frame as my highest time frame to start doing my analysis on, since I'm just a day trader. Now once you are on the 4-hour time frame, you have to know what's the current nature of the market. Is it currently trending, or is it just in a ranging condition? If it is ranging, meaning that if the market movement is just sideways and not going anywhere, ignore that pair and look for other pairs to trade, as the rule is to never trade on ranging markets. But since our market nature shows us that the market right this moment is trending to the downside direction if we are to be specific, and this shows us that we are to look for sell entries, right? Knowing this, knowing that the higher time frame is telling us to look for sells, then we progress slowly to the lower time frame so as to know again the current state of the market. I guess you can call this as reading between the lines here. Now guys and girls, remember this one thing: the market always moves in 3 phases. Impulsive phase, then comes corrective phase, then comes impulsive phase, then comes corrective phase, then comes impulsive phase again, and then comes corrective phase again. Then again we have an impulsive phase right here, then comes a correction, as it can be seen right here. So judging by how the nature of the market moves, impulse correction, it makes it almost easy to know the next market move, what it might be, right? Correct. But you have to note this one thing down: it is not as easy as it looks, but with time and enough practice you will get there. You just have to trust the process. So deleting all this mess on the charts, let's mark this zone right here on our corrective phase market. Then what's next is we have to progress to the next lower time frame, which for this case will be the 30-minute time frame, our entry time frame. Now looking clearly on this lower time frame, looking very clearly on this lower time frame, we have to look for how the market is behaving while it is on our zone. We can see here that whenever price reaches this zone, it fails to go much higher, and as a result it leaves us with these weak rejections and go back much lower, as it can be seen on your screen right in front of you. Now, should you enter the trade right away just because the price is on our area of interest? No, never do that. At least not before defining your exit plan. For guys and girls, I tend to put my stop loss above the most recent weak rejections. That's it. So this number right here will be my stop loss. If it is hit, simple, I will stay out of the trade. But that does not mean I will always accept that loss right away. There is this thing called stop loss hounds. If lots of people out there in the world put the stop loss the same as me, then the market will try its level best to clear some orders out before proceeding to its direction. Let that be another video's topic here. So getting back to our trades, let me press the trades right away.
A few moments later.
Ladies and gentlemen, if you want to join my VVIP mentorship services or a paid Signal page, please do click the link in the description for details. Now please take this time to click the like button, then hit that subscribe button without forgetting to turn the notification bell icon on. Thank you for watching and bye.